Hello and welcome to another update video about FETCH.AI. We want to take a look at the daily time frame here. And what you can see on this chart is that the market is most likely still in the white scenario, which is the directly bullish one. However, there is a very clear level that helps us distinguish between the white scenario and the yellow scenario. And it's very important to understand that it is not an invalidation point for the white scenario, but this is where probabilities start to shift and where the price might rather take a more bearish route in the short term, okay? So it's important to recognize we have in the white count an A, B, C structure to the upside, and the C wave is wave 1, wave 2, wave 3, wave 4, wave 5. And this fifth wave to the upside would start from this region between 52 cents and 75 cents. That's, that is what ideally would happen. Fifth wave up into that target zone there. 622 is a key level there. But what we don't really want to see is that the price breaks below 52 cents because it would start to shift probabilities. Below the 52 cent level, this is just too deep for a fourth wave. And I have to say, I mean, I'm very much questioning whether this will hold. I would already mentally prepare for it to break. The reason is that I see on several cryptocurrency charts support levels have broken. That's fact. That's absolute fact. These are typically not the coins that I cover. I'm talking here about really the substantial support areas. On most of the coins that I regularly cover, these are still holding, but I'm talking about a lot of coins that get requested. And when I look at these, they are broken. Most of them are broken. So I would not rule out here a break of support as well. We have to prepare for it. There is no reliable reversal signal from here anyway. And what we can use to identify a target is the Fibonacci extension tool. And it points actually towards 44.8 cents. Now that is a concern because any break below 52 cents, again, it will shift probabilities to the yellow scenario. So we have support, that's one thing. But we can also calculate internal targets. Now, from a bullish point of view, this would be an A wave down, a B wave up, and a C wave down. And the C wave would normally reach the 100% extension. So if it's only a brief break of support and a swift recovery, that would be, I would say, acceptable. I will leave that level on the chart. For those of you who are not so familiar with Elliott wave, the 100% extension is usually an ideal target. What we don't want to see is a sustained break below support. So, but there's really, I mean, this is the area where the bulls need to turn up to save the white scenario. Any break below that area, especially between 44.8 and 52 cents, will mean that the yellow scenario most likely will drop to 10 cents in the first instance. Or let's say 20 cents. Yeah, 20 cents. We have to consider that in the yellow scenario, the B wave that potentially bottomed, it's a large corrective pullback, the B wave that potentially bottomed in November 2022 is still unfolding, with then a very uncertain long-term outlook. In the yellow scenario, this is bearish, A wave down, overshooting B wave, C wave down. I mean, I've been highlighting since the market topped here in April 24 that this is not a very strong chart anymore. We saw that based on how this move up developed. I still decided to give the chart a chance, but a lot of people didn't want to hear it, right? But again, I can only base my analysis on what I see right now in the charts. And already then it was too weak because it didn't reach in this third wave the 138% extension, which is normally my minimum expectation. But we still wanted to give it a chance, but you see it's suffering. It's suffering. So to keep it very simple, as long as above that 52 to 44 cent area, white count has a chance, but there is no clear reversal confirmation yet on the local time frame, on the smaller time frame. Below 44.8 cents, the yellow scenario will likely take us into the lower support area that starts at 20 cents. So let's take a look at the smaller time frame then, and here you can see the price action from the Monday low, last Monday, to the upside. You could call it a wave 1, which means potentially an upside reversal pattern. And this move up is getting corrected now. We have a pullback. We're in a support area between 65 cents and 76 cents. The price does show an initial reaction to it. The move to the downside could be classed technically complete. However, that doesn't mean a reversal has to happen. There is a lot of work required. Short-term support is at 65 cents, which means below 65 cents, it's likely the Monday low will be broken, which is located around 60 cents, and then we'll test these lower support levels I mentioned. So ultimately, what is needed is a break above these green signal lines. First of all, 79 cents, then 82 cents are the next levels that need to be broken to the upside. Yeah? And then we can watch here for third wave rally, wave 4, wave 5. So ultimately, I'm very much watching if the price is turning around here, but without any break of a previous swing high. This is just ranging at the moment, yeah? But the levels are clearly defined. So that's the update about FETCH.AI. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.